Good morning. Good morning. Welcome to BHG Financial Investments and Securities. I'm your host, the Wall Street Bully. Thanks again, guys, for tuning in today. I want to talk about a stock that has been in the media a lot lately. It gets a bit of a bad reputation. I want to talk about Tesla stock. Again, that company is Tesla stock. They get a bad reputation. Like I said, I mean, they have been in the media quite frequently, and partly because the stock has run up so fast, so quickly. It's run up so high so quickly. Um, but Tesla is not a bad company as far as being financially fit. The company is strong. I mean, we're going to see that in the numbers that I'm about to go over with you guys. The company demonstrates real financial strength, and I think that needs to be emphasized within this session. Again, Tesla is not a bad company. They're not a bad company at all. I'm going to reserve my judgment until the very end of the video to let you guys know whether I would invest in a company at this price point or not. I'm going to save that for you later on in the video. But let's get started. Let's talk about Tesla. So as this is right now, Tesla has a PE ratio of 626.47. Again, that's 626.47. That number is exorbitantly high. We don't want anything that high as far as for a PE ratio. Again, it's price to earnings ratio. We normally like this number to hover within the interval of 15 to 20. They'll let you know you're getting it at a good price point. Again, we want the company to be undervalued once we purchase in. We don't want to buy it at market value or definitely not overvalued. So to maximize your investment, you always want to buy your companies undervalued. And sometimes that can be difficult to do. Competitive advantage. Does Tesla have a competitive advantage? Yes, the company does have a competitive advantage. They have the lion's share of the market in terms of the EV sector. Again, we're talking about electronic vehicles. I kind of dove into this a little fast. Let me let you guys know exactly what Tesla is and what they do. Tesla is a company that exists within the EV market space. Their primary objective is to manufacture and produce EV vehicles. They also are within the roofing industry. So they produce roofs and they also produce solar panels. So they have different vertical lanes in which they can also be profitable. EV vehicles is not the only lane. Tesla's a great company. Let's get back to the numbers here. Price to earnings growth. Again, this is price to earnings growth projected over the next 5 years. Typically, we like for this number to be below 1. Right now, this number is sitting at 13.15. Again, it's 13.15. That's incredibly high. That's incredibly high. And we're talking about return on shareholder equity. Again, this number is return on shareholder equity. We normally like for this to be greater than 20. Again, greater than 20%. Now, right now for Tesla, it's sitting at 6.19%. The number is 6.19%. So as you can kind of see where we are right now as far as the fundamental analysis, you can kind of start to paint the picture and you see how the company is evolving within the numbers. So, right now we're at the valuation of return on shareholder equity, and you can kind of see how it looks a tad bit expensive to buy in at this price point. And again, when you're doing your own research on your companies, you want to make sure that you are also conducting this type of fundamental analysis so you know what price point to buy in on a company. Again, the fundamental analysis kind of allows you to investigate those companies, and it kind of does the background work so you'll know where to buy. Again, based on fundamentals what to buy, but you can also know when to buy. So let's go back in. This is return on invested capital. That is at 4.16. Yeah, so definitely a little low. Price of sales. Again, we like this number to be greater than 3. Right now it's at 15.75. Again, the number is 15.75. Price to book value, most recent quarter. We typically like for this to be below 3. Again, below 3. Right now it's sitting at 24.30. Again, it's 24.30. Gross profit margin, 21.18. That's not bad for a gross profit margin. I like to see it above 30%. 21.18. It's tough. That's tough. I've seen worse, so I don't want to shoot down the profit margin here because I've definitely seen worse within the tech sector. But again, I like for it to be above 30%, but that's something that the company can grow and make happen. Net profit margin right now as it sits is at 3.50. Again, it's a net profit margin of 3.50%. That is extremely low. We normally within the tech sector, net profit margin should be between 10 and 12%. So to have it that low, you really don't want your margins that slim. That's kind of a telltale sign, you know. So operating profit margin is 6.41%. It's not terrible. Annual growth rate. Now this is pretty good. This is where the story kind of starts to change on Tesla. It's currently at 38.12% for the annual growth rate. That's pretty good coming off the heels of the pandemic. I think the company is doing a great job. Again, that number is 38.12% annual growth rate, 12 months. So, and now this is where when I started doing the research on Tesla, it kind of was bringing to my attention just how well the company has been performing. So it's definitely not a bad company. It's just the price point right now seems incredibly high. But when you really break down the numbers, Tesla is not a bad company at all. So we're looking at price to free cash flow year over year. We normally like for this number to be between 15 and 20. Right now, as it sits, Tesla's price to free cash flow year over year is 290.29. Again, the number is 290.29. Is that high? That is extremely high. So, yeah, again, that lets you know just how overvalued the company is at its current valuation. The free cash flow growth rate, 12 months, 79.80%. Again, that's 79.80%. That's a phenomenal number. That lets you know that Tesla really does have a lot of free cash flow circulating through the company. So that lets you know just how healthy they really are in terms of cash flow management. That's good. You really want that number to be that high is incredible. We're talking about a free cash flow growth rate with a trailing 12 month of 79.80%. That's a phenomenal number. So they definitely get kudos for that one. Let's talk about debt to equity ratio. One of the things I found out about Tesla doing this research is that the company was not in as much debt as I thought they were going into this. That surprised me about Tesla. So as far as debt, they're doing really well. That was surprising to me. I really thought, just based upon what I'd heard about the company and just the minimal research that I'd done prior to this, that the company wasn't faring too well, but that was false. The company's doing extremely well in terms of debt. And again, this is one of the things that I like to investigate. I want to make sure that these companies or that they have the least amount of debt on the books in terms of moving forward, because how I view debt. Debt is like a weight, so you don't want your company to have a whole lot of debt on the books because that propels them or stops them from moving forward. And that's something that you definitely want to make sure that the companies don't have. Now, debt to equity ratio for Tesla is 0.54. Again, that number is 0.54. So we'd like for this to stay less than 2. 0.54, that's pretty good. That's really good. Total debt to total capital, most recent quarter, 30.77, not bad at all. I've seen so many companies with a way much higher number than that. So, again, 30.77, that's not bad. That's not bad. And the quick ratio for Tesla, as it sits right now, is 1.38. I think the number is 1.38. We'd like for this number to be greater than 1, and for Tesla it is. So the current stock price, I believe it was 600. Let's go back. If it'll let me. Okay, yeah. The current stock price for Tesla, as it sits right now, is $625.22. Again, the current stock price for Tesla, as it sits now, is $625.22. No, I would not buy into Tesla at this price point. I think that the company is a tad bit overvalued. I think the numbers indicate that it's overvalued. I definitely would wait for it to come down. I mean, a P/E ratio, the P/E ratio was 626.47. I mean, so, you're buying in at a price to earnings of 626.47. That number would have to come down extremely lower than what it is now. So I definitely don't recommend anyone buying into Tesla at this point. What I would recommend is that you keep it on your watch list. Just kind of, look at it, see how it's performing over time. Make a mental note to study Tesla. I do think the company has demonstrated some really good financial strengths. Again,
We saw that earlier in the numbers as far as the amount of debt that they have on the books. They're doing extremely well within that category. So, the overall financial strength of the company is there. The gross profit margin is there. So the company does have some really good numbers, some really good benchmarks here. But I just right now I don't see this as being a good investment. There are other companies that are out there for this type of valuation. I think you can definitely find some better companies to invest in at this particular price point. So I'm the Wall Street Bully, and I'm signing off. Guys, please don't forget to like, comment, and subscribe. Please don't forget to like, comment, and subscribe. I always forget to tell you guys that, and I'll think about it right at the end of the video, but it definitely helps out the YouTube algorithm. And I want to grow this channel as much as I can. I want to provide as much information to you as I can. And so again, that definitely helps us out. But again, I am the Wall Street Bully. This is BHG, Financial Investments and Securities. Thanks again, guys. Stay blessed. Take care.